Alright guys, welcome back to the channel. So this video is going to be all about backtesting, and it is such an important one, and I'm quite excited to deliver it to you, right? Because if you take this on board, take all the information on board, take this video seriously, grab a pen, grab a notebook, this will change your trading journey, right? And it will change the direction and the path that you're going on. So this is one of the biggest areas that I find people lack in trading, and why there is such a high failure rate in this industry. And the really frustrating thing about all that is that most people don't understand the power that they, and the true belief transference and the true empowerment that they will receive from going through this process, seeing the numbers, crunching the numbers, and they really can't comprehend what that will do for their trading future, because they just don't know, right? You don't know what you don't know. I can assure you this process will have a profound impact on your trading knowledge, your trading ability, your trading sort of vision, and your process, if you go about this the right way. Okay? And again, it's very frustrating to see that people don't understand it, right? And I can see it a mile away when people don't understand and they don't value this process, right? This video was sparked for a few reasons, right? One was a couple of messages that I got from traders, and the second was a poll that I saw on another trader's channel, which showed that the majority of people, when he had quite a large following, like quite a large channel, showed that the majority of people don't backtest, or they can't backtest properly, they haven't backtested, right? So that really sparked like a little light bulb in my mind to push this video out, and to really try and to really urge you to take this seriously and really understand that this is one of the most important parts of your trading future. So obviously, as you know, and I'm sure you've probably heard a lot of people say about it, like trading psychology is one of the most important parts of trading, right? And the way that you get a good trading psychology is to have faith, to have belief, to be calm, composed, to know your system like the back of your hand. And the only way that you are going to get that is through properly backtesting and collating the right data accurately, right? Which I'm going to go through that. Collating the right data accurately and being able to analyze that data accurately, and then building your trading strategy from there. So the way that I'm going to go through this this video is I'm going to be, no matter how long it is, and I can assure you this video probably is going to get quite long, because this is such an important topic. If you can't be bothered to sit through this video, and you can't be bothered to take this video seriously, then your future as a trader is either going to take you a very long time, a lot longer than it should do, or you might as well give up now. So through this video I'm going to show you all the metrics as a bare minimum that you need to record in your backtest, so you know what information you need to get as a whole from your trading system. I'm going to show you exactly how you need to backtest so that you don't sway your results. You're not sort of hindsight trading. You're getting accurate results as you would live in real time, right? Live trading. I'm also then going to show you how to build out a spreadsheet and some different formulas you can use to make it easier on you. And then I'm going to show you, once we've got the way that, I'm going to show you the way that I backtest, okay, the way that I go through this process, the way that I've found to be most efficient, and the way that I prefer to do it, right? And then obviously, of course, I'm going to show you how to optimize, right, which is a very important part of building a profitable trading system, and how to optimize it correctly, so that you're not sort of bending results, and you're not sort of curve fitting, right? And we'll get into curve fitting later on. So I'm sure many of you have either, and you may even think this way, you've heard that trading is very risky, most people don't succeed, it's just gambling, right? Now, to me, being able to backtest eliminates all of that. You need to build out a specific set of rules prior to your backtesting, right? So when you go into your backtesting, you've already got a specific set of rules, right? So backtesting, effectively what it is you're going back and you're testing a system or a strategy that you wish to take forward and to trade in the live markets. It allows us to know that our system that we wish to trade works before we even put any money on the line. As far as I'm aware, it's unique to trading. There's very few business models and businesses in the world that actually allow you to to some degree have some level of certainty that allows you to go back into previous data and actually prove, right, what you're going to be taking forward into the live markets works, right? But only if you go about that that process the right way, okay? And as I'm going to show you in this video. Now, that to me takes all the risk. Obviously, bearing in mind there is going to be some risk which you need to be able to eliminate. You need to learn how to trade the right way and make sure that you are managing risk, which is a different topic. But provided you could do all that, it eliminates nearly all of the risk. In fact, I think it's probably one of the least riskiest business models in the world, right? Obviously, you could start any sort of company, any sort of company, and there's risk attached to that, right? You don't know that what the product or the service that you're going to be delivering is going to work. There's all manner of things that can go wrong in any business, right? And obviously with trading, we've got the past data so we can prove that what we want to do works, right, before we even go and do it. So but as soon as you've got live money on the table, you need to be very level-headed, and you need to be able to allow your system to play out, right? Allow the probabilities to play out and to not sabotage them results. So what I mean by that is you don't want to be going into live trading and bending and twisting your rules because you're emotionally attached to each individual trade, and you get swayed by other people. Let's say someone puts something on Instagram like they're short the euro US dollar, but you're long the euro US dollar. Like, a lot of people allow that to get to them, and they think, oh, but this trader's long, this trader's short, okay, and they take influence from other people. What backtesting allows you to do is it allows you to think, well, I don't care what they're doing and what their system's doing, because that I've tested my system, the way that I'm trading it, and I know that I've got a positive expectancy over time. Let's say that I see a trader that's long the euro US dollar and I'm short the euro US dollar. I never ever second guess myself. I never question myself. I don't care, right? Because I've done the testing. I know that whether or not the individual trade that I'm in wins or loses, that over the long term I will be profitable if I can stay consistent and I stick to the rules that I've tested in past data. Okay, so it gives you that psychological confidence, that psychological ease to approach the markets and attack your trades and trade as a professional and as you need to generate consistent profits over time, right? So obviously another thing that backtesting allows you to do is it allows you to grow as a trader, because if you don't backtest, right, you're not going to be journaling your trades, right? So basically, once you've done all your backtesting and you have data from the past, and then you start live trading, or you do a period of demo trading first, and then you start live trading, right? The chances are, if you haven't even backtested, you're not going to be journaling your live trades, and that then the journaling becomes your new backtesting, right? And if you're not journaling and you're not backtesting, you're not going to evolve as a trader. You're not going to grow, right? Because you've got no grounds to grow, right? You've got nothing to go on. You can't see what you was doing. You can't see what works, what doesn't. You'll find yourself just taking other people's words for it, which you see all the time, right? Really going to trust them people? You need to be self-sufficient, right, to have any success as a trader. And this video is going to show you exactly how to be self-sufficient as a trader, and I can assure you, taking this video and this process seriously and being able to become a professional backtester first and trader second is going to take years, and I mean years, off of your trading journey. Okay, so let's get into it. The first thing you're going to want to do is obviously you're going to need a spreadsheet to record the data, right? And you're also going to need a charting platform. So I use TradingView for my testing. So you're going to need to sign up for TradingView. I'd recommend signing up to TradingView Pro. Obviously you can use TradingView for free, but with the Pro you get more data. So what you want to do on TradingView is go onto the time frame that you want to trade. If you wanted to test multiple time frames, I'll be getting into that later on in the video, right? So just scrunch your chart up, okay, as far as it will go, right? And then go back to where you get until the data stops, right? Okay, so this is where I don't get any more data on TradingView. Now, a little trick that a lot of people don't know about is if you look down the bottom, right, this is the 2nd of January 2019. Okay, so if we now click the replay tool, right, and then put it right at the end of this data series, right, at the 2nd of January 2019. Okay, so at the moment we've only got 2 years worth of data, and I press the replay tool there, right, it's going to give us another 2 years worth of data. And then if we pull this all the way to the left, okay, you can see if you look down the bottom now, we've got it till the 3rd of Jan 2017. Okay, so on the hourly time frame, we've now got 4 whole years of data that we can test, which is most likely going to get us quite a nice sample size. Alright, so when you build your spreadsheet, I suggest that this is the bare minimum that you record, right? This video is literally to be is a simplified version of testing, right? And obviously I suggest that as you progress in your trading journey and you develop as a trader, your testing gets more extensive and you start testing other stuff, right? So what you're going to want to do is you're going to want to set yourself up a spreadsheet, and you're going to need the date of the trade so that you can refer back to it, and so that if you put multiple pairs into your portfolio, you can put them in date order, right? The strategy for your reference, okay, whatever strategy, we'll take a look at that. The pair, so that you can identify obviously the pair, the time frame, your entry reason, right? So the reason for entry, whether that be you know, a candlestick formation, you know, whatever that is for you, right? Whatever your entry reason is, and the outcome, okay, win or loss, right? So this is the bare minimum. Now, the only reason I've done one outcome column is because I'm always going to do, this strategy is always going to be a 2-to-1. Okay, so it's just going to be a pure baseline test, which is how I like to do my testing. I like to do a pure baseline, so it's almost like a control, right? And then I'll go back through and I'll add different target levels or add different stop levels, and I'll test it multiple different ways, okay? So obviously you can see the start balance here, okay? So we're going to start with a 10 grand account to make it easy. We're always going to be risking 1.5% per trade, and the profit is always going to be 3% because it's a 3-to-1. A 2-to-1, sorry. Right, this column here is going to be our running account balance, okay, and whether or not we win or lose, if we put a W in here, okay, it's going to convert this to a win, okay, same here, and it's going to basically just automatically adds up our account balance. So the way that I did that is through formulas, right? So if you want, so what I'll do is I'll show you the formulas now so that you can copy this spreadsheet into Excel yourself, okay? So the outcome doesn't have any formula, even though that's where you put the W or the L. So in the trade amount, you need to put this formula. And then obviously where it says G18, J18, L18, J18, K18, they're going to be your different, they may be different depending on where you put these cells in your spreadsheet, okay? So if you keep the cells the same as mine, the formula will be the same as mine, right? Or you could just alternatively put your spreadsheet in a different place and, you know, convert the cells, right? I hope that makes sense. So I'll just leave this here for a second. You can pause this and obviously get the formula, right? So that's the formula for the trade amount. Okay, if you go to running account balance, right, that is the formula for the running account balance. Okay, and once you've got both of these formulas in these boxes, what you want to do is you want to click the box, and then you're going to see this little square that comes down on the right hand side, and you're going to want to just drag that all the way down to, you know, wherever you want to stop, right, all the way down to the bottom of your spreadsheet, to then copy the formula all the way down, okay? And then the same with this one, right? Once you've got the formula written in there, you can then click this box, right, hover over it and drag it all the way down so the formula copies into every cell, right? And then what you can do is you can then adjust your risk, okay? So at the moment this is 1.5 and in risk and in 3% profit, okay? Because remember, this strategy is just going to be a 2-to-1 on a complete baseline test, right? And then say that we want to change our risk, we just put minus, let's say we want to risk 2% per trade. Double click again, okay, to copy the formula down, and then this is going to be 4% because it's always a 2 to 1, right? And then we're going to double click that little box, and then it's going to copy. And obviously you don't have to stop there. Obviously you can, you know, get good with Excel. I suggest that you do spend some time learning formulas and familiarizing yourself with Excel so that you can make your own spreadsheets and make them more complex as you evolve, right, and as you want to test more stuff. So then what I like to do is I like to see my equity curve, okay, which is going to be the running account balance but in a table form, right? So what we'll do is, when you've got your data, obviously we haven't got any data yet, but you highlight all the cells that you want to include, okay, and then you go to insert charts, right, and then you click on Excel, you press this little chart, and then you can do a line chart, right? So look, press the line chart, and then obviously you can add a chart title. I call mine equity curve, right? And then you double click and you can just mess around here with different styles and change the parameters and all the rest of it, make it your own, right? And what I also like to do is I like to have a description of my rules, right, that I'm testing, and then I like to have a bigger equity curve at the end after I'm finished, right, so I can see in like on a bigger scale my equity curve. And then as a minimum on that chart I will, you know, I'll get some main takeaways from my testing, right? So these are the main things you want to look at. So note they're all the main takeaways that I like to look at on my equity curve is all to do with my drawdown, okay? And that is all to do with my trading psychology when I go into my live trading. Most people, have they not done this, and they don't know this information. Most people don't know this information, right? But if you don't do this and you don't run through this information, you're trading for a month and you haven't made new equity highs in your account, most people are going to stop and they're going to give up. But obviously you can look at your testing and you can go back and you can say, well, actually, there was a period back in 2017, right, where the longest period I had without a new equity high was a month and a half, right? So actually this is pretty normal. Okay, or you know, I can keep trading normally, or alternatively you can say, right, well, it's been a month, I haven't had a new equity high, but the longest period without a new equity high in my testing was only 2 weeks, say, right? So then you can think, right, okay, is there a discrepancy between my live trading and my testing? The other thing you're going to need is you're going to need some test information. So you're going to need your period that you tested between. Right, so at the moment we're testing between Jan 17, right, and Jan 2021 on the hourly time frame. Now obviously the period that you're testing is going to differ depending on the time frame you're on. Let's say that if you're testing the 1 minute time frame, Jan 17 to Jan 2021, that is going to be a massive sample. That's a great sample size if you can get that, right? Or alternatively, if you're testing the daily, between Jan 17 and Jan 21, you're probably not going to get many trades, okay? So you're going to want to be going back a lot further the higher time frame you go, right? If you're on the higher time frames like the weekly, daily, maybe even the 4 hour, with some strategies, right, you may struggle to get 100 trade sample size, but just go back as far as you possibly can, right? Go back to 2000, right, and then get that sample size that way. And then also you're going to want to have some time diversification there. So for me personally, an absolute minimum is 4 years, right? 4 years time diversification at an absolute minimum. You want between 4 and 10 years, again, depending on the time frame. If you're on the 1 minute, you could probably get away with sort of, 2 to 3 years, okay? Like that would probably be sufficient depending on the sample size that you get, right? But you also want time diversification, not just the sample size. You want to know that your strategy can stand the test of time. Right. The next metric you're going to want to know is how many trades you got total. Again, minimum of 100, right? Or as far back as you can go if you're on them higher time frames, right? So total wins, total losses, obviously we need them for obvious reasons so that we can get our win rate, which is going to be measured in a percentage. Okay, so our average win is always, in our case, is going to be 2R. So R being risk, okay? So if the risk is 1.5%, 2R is going to equal 3%. If our R, so our risk is 2%, then 2R is going to be 4% risk, okay? So I hope you follow that. Right, so 2R, and our average loss, right, is going to be R, okay? Whatever R is, right? So our maximum drawdown, okay, that is also going to be measured in a percentage so that we can then get our risk, okay? So that is going to help us determine our risk for each trade, right? Because we don't know that yet. We might want to risk 2% per trade, but we might get a 20, that might give us a 50% drawdown, and personally we don't want a 50% drawdown, all right? You might be happy with 50% drawdown, some people might not. It's going to be personal, right? So we're going to need to know our maximum drawdown. Maximum consecutive loss, okay, this is an important one as well that people disregard. You want to know your maximum consecutive loss, because there's no point people just throw the number out there. They say, oh well, 6 trades and then I won't trade anymore, but they haven't actually done the testing to get that number. You might go through your testing and find out, well actually over this 5-year period there was a time where I lost 10 trades in a row. Okay, so if you're only losing 6 trades in a row, then you're well within that parameter, right? You want to get that number anyway. Your profit factor, which we won't go into because I made a different video on this. Same with expectancy and expectation. Okay, I'll link that video in the description, and I'll put a picture of it of the thumbnail up so you can see. But all right, so let's get into the testing, right? So ideally, when you're going to do this sort of test, you want 2 screens ideally. But if you've only got one, a good trick if you are on Windows is to grab your test sheet or drag it down into the bottom corner, okay, into the bottom left, right? And then it will expand, and it will then ask you to select another screen to put next to it, right? And obviously we want to put our charting package. So what I'm going to be testing is just a very simple divergent strategy, right? Again, very baseline test, very simple rules. I'm just going to be looking for it anywhere for this example, right? Just to keep it very simple. So I just want price action to be putting in higher highs like this, right? And then the RSI to be putting in lower highs. Okay, then some form of rejection, which I've specified. Again, the specific strategy that I'm testing isn't important, right? It's more the process that you want to be following along with. So when you go through and test, it's very, very, very important that you don't just sort of scrunch your chart up like this, and you don't just look through trying to find your trading opportunities, right? Especially if you've only just started trading this system and you haven't put a lot of hours into testing, your eyes are automatically going to be picking out the winners. Okay, so basically what you're going to be looking for is, I'm going to be looking for moves like this where I get higher highs, lower highs on RSI, and then a rollover. What I'm not going to be looking for is all the times that the market just continues higher and I get an ever so slight entry signal here, but then the market just continues higher. Okay, so because I'm not going to be looking for that, right? I'm looking for this type of move and then a rollover. Same with the type of system that you'll be testing, right? I can promise you that you will miss losing trades if you do that. Now, that is going to give you false expectations for your live trading. You want to really, really try and capture all the losers you can. Okay, you really don't want to be giving yourself false expectations going into live trading, because as I say, this is what is going to, your ability to do this properly, right, and become a good system developer is going to determine your success as a trader, okay, 100%, period, right? You want to learn to become a professional backtester first and trader second, right? So the way that you eliminate that, okay, is to go through bar by bar. And what I mean by that is to go through and simulate as best as we can the markets in real time. Now, obviously, where we've gone back through and we've sort of done our little replay mode trick, right, we can't then use the replay mode. So what we're going to have to do is we're going to have to go through very slowly as if we was playing this out in real time. Okay, the second that we know what's going to happen next, That is hindsight trading, okay? But you want to try and eliminate that altogether in our backtesting. If you know, the trouble is if you know what's going to happen next, say like I see this trade here, the chances are that you're going to make up some sort of excuse to get yourself into that trade because you know it wins. And the same as if it loses, right? If you know that a trade loses in your backtesting, you're probably going to try and make up little excuses as to why you wouldn't have taken that trade, right? And you're not going to be able to do that in live trading. So let's just take this trade for an example, right? And then what I'm going to do is I'm just going to show you a few examples of the trades, right? And then basically what I'm going to do is I'm just going to speed it up, time lapse it, populate all the information into the spreadsheet, okay? We're going through, price is put in a rejection, okay? And we've got the RSI has gone overbought, right? And then bang, we put in a higher high, right? And we put in a lower high on the RSI. So at the moment, this for me now is looking like a valid trading opportunity if I can get a entry into the trade. Okay, so I've got a pin bar here, right? And that for me is a valid entry signal. Okay, this pin bar is a valid entry signal, and how I'd usually trade this is I'd put a limit order below there, so if price pushes down I'll get entered in, my stops would go above the high, and then targets would go at a 2 to 1. Okay, so I'd have my limit order in now and it doesn't get triggered, right? So then I'd cancel my limit orders and then bang, right? We get a lower low, lower close. Okay, so we get some indecision and then we get a lower low, lower close. So what I like to do is I'd enter a short position. Okay, my stops would go in this case a few pips above the high of the previous candle, right? And I'll be looking for, where do I get a 2 to 1? I get a 2 to 1 there, right? And obviously, as if this is playing out in real time, right? Bang, okay? So that would be my win. So what I would then do is I would then just put that up above to one side, okay? Put an arrow where I got entered into the trade, and then I would carry on. Right, what you can do is you can then populate this as you go, right? But where I'm doing such a basic baseline test, I'd just like to carry on with my testing because I'll get into a flow of that and then go back through once I've got all the entries and whatever else sort of like this, right? And then I'll just go back through slowly and populate all the data because then I'll get into a flow of that. Okay, so that's just going to depend how you like to do it. I never did used to do it that way. I'd used to enter it as I went. But yeah, now we're just like getting in the flow of testing, go back through, wait till I've got all my results, then I'll populate my baseline test, and then I'll obviously make a judgment on what I want to track, whether I want to go through, test different stop levels, different target levels and all the rest of it, right? So another thing that you want to make sure is that you're entering these trades when you'd be awake. Okay, so this candle here would be 5 o'clock in the morning or the 5 o'clock close, so 6 o'clock in the morning, right? I personally would have entered this trade. That is when I would, that is the first candle I'll be looking at all the way till the 8 o'clock candle, right? And then I wouldn't enter any more trades after that, right? Right, so as you can see, price, we put in a low and we've started to retrace up and we're just tipping oversold. So obviously I'll be keeping an eye on the RSI to see if we get a lower low and some divergence, right? And again, note, you can see that I'm going through very slowly, bar by bar, right? I'm not scrunching my chart up, going like this and looking for trading opportunities halfway through so that I can then see what happens, just like this. Right, I can now see that this trade, look, I get higher highs on price action, right, here. I get lower highs on the RSI. Let me just move this over. In fact, okay, so as you can see, look, high highs on price action, lower highs, but I saw this coming, right? You don't want to do that, right? You want to be going through bar by bar so that you don't know what's coming, right? So that you're simulating live trading to the best of your ability, okay? That's so important. So this again, I just about, okay, from there to there, right, again, just about get a lower low, okay, and I get a higher low on price action, right? And as per what I'm testing, just as a pure baseline, that is a valid entry. So again, if I test this sort of stuff and I go back through and I think actually no, that doesn't, you know, I'll just make a note of it, go back through after my baseline, and then I might eradicate this type of entry and I might build a rule around it. Okay, but for now I'm tracking it. So I've got a pin bar there. Okay, as per my rules, I would set a buy limit. Okay, stop loss just below the low, and again I want a 2 to 1 as a pure baseline, and bang, right, we get entered in. Just make sure that this, I'll be awake, and yet 12 o'clock in the daytime I would be awake. So I then move this down here, right, because I know it's a win, and I then put a red arrow where I got entered in the trade so that later on I can come back through and populate any information that I need to populate, right? So same again, price goes overbought, we get a rejection, okay, and puts in a higher high and then a lower high on price action, and then we put in a pin bar. So live trading, I would actually be putting in my limit orders, okay, waiting for them to get entered, and it doesn't get entered, so I'd then cross it off. So obviously I know, right, if I was looking like this, okay, and I saw that, the chances are, where I know that it's going to win, what you don't want to lie to yourself, right? So you don't want to say, oh, actually I would have entered that one, right? You want to be as honest as possible, and you want to really, really try and find them losers, okay? You want to lower your expectations in backtesting. So this, I would actually be able to get entered into this, to be honest with you. And it would be an at market order. So I'd enter at market, stops a few pips above the high of the previous candle, looking for a 2 to 1, wherever I get a 2 to 1. So 2 to 1 would be there. And obviously you can see that we then roll over and I actually do hit targets. Just make sure I'd be awake. Oh no, see look, this would be at 10 o'clock. Okay, so this would have been at 10 o'clock. The 10 o'clock close, so I wouldn't have actually been entered in that trade. Okay, so again, you've got to make sure of that as well, right? When would I be awake? I'd be awake on this candle. So again, just making sure that, you know, just going back through my testing now as I would normally would, right? Okay, so we get a high, price is nearly oversold. If we can get a higher high and divergence on price action and then a rejection, okay, so like this, right? We get a higher high, just about, divergence on the RSI, we get a rejection, so in live trading my orders will be going in, right, and then we don't get entered, okay, and then it looks like we just rally up, right, and then bang, okay, we get a rejection candle. Obviously there becomes a limit where it's like, right, you go back too far and it's like you can't just take oversold conditions from however long ago. But this is very, very recent price action. Well, I'll personally be putting in my limit orders there. Okay, so for me, I'd put a limit order there. Stops a few pips below the low, above the high, sorry, and targets at a 2 to 1. Right, again as a pure baseline. Okay, so like that, and obviously I'd then get triggered into this trade. And then obviously look, we roll over there and hit targets, okay? So then I'd move this up here and carry on from here, right? So again, another winner. So now look, we got a lower low, right? Oversold conditions on the RSI. Looking for a lower low and then divergence now, which it doesn't look like we're gonna get. So I may be looking for an entry in the opposite direction now. Okay, which I do actually get. So look, very, very, actually, 1, 2, and then my rejection, slight divergence on the RSI, so there, just make sure I'm up, setting my orders here, on this baseline test like that, for a 2 to 1. It looks like we're going to hit that. So again, yeah, I'll get entered in and we hit that just about, right? So see, this isn't ideal. When I get setups like this, it meets my rules, but it isn't ideal. And this is where discretion is going to come in over time. Obviously, what you want to do on your baseline is just track it. Don't disregard it straight away. Just track it and then make the judgment once you've collated your data and you go back through and sort of really start crunching the numbers, right? So again, look, lower low, okay. Do I get divergence? I do actually get divergence, just about get a higher high, higher close. So this would actually be another entry, an at market entry for me, based on that 3-bar reversal. Stops a few pips below that high, below that low, sorry, of the previous candle. Targets on my baseline at a 2 to 1. And just get wicked out of that. Okay, so that's a loser. Right, so I'll put that down there. That's a loss. Okay, and again, same situation. Look, you can see divergence on the RSI. Get a rejection. This is so I'll be able to enter this 2 ways, because to me that's I class this as tweezer bottoms, and it does actually wick past my pin bar, and that pin bar is valid for me based on my rules. Okay, so the pin bar would have been entered first. Targets at a 2 to 1. And again, obviously, I'm just doing this as a baseline 2 to 1. What you can do is you can look for targets at a retest of this high, right? When you go back through, you know, like you can track all types of different stuff. Okay, this is just a very, very introductory back to, you know, it's just to give you some ideas, right, of what to track, how to go about doing it, more importantly. Okay, note the way that I'm doing it is in going through bar by bar what I'm tracking, okay, and all the rest of it, right? And we just get stopped out of there, right? So again, a loss, right? And again, as we're going back through, populating our information, we can make note on all this type of stuff, right? So this trade, would it have hit out previous structure? Yes, right? We can go back through all the trades that potentially lost and that would have hit previous structure, right? Could we improve our system through that? This is all going to come out when you go back through, okay? So we would have got stopped out there, right? So divergence between there and there, yeah. Lower lows and price action. Divergence on the RSI, get a pin bar rejection, right? So again, making sure I'm awake, 1 o'clock in the afternoon, yeah. Orders go in a few pips above the highest, stops a few pips below the low, looking for a 2 to 1 on this baseline. And again, quickly run up and hit that, okay? So down there, okay, that's my entry, right? I would have hit targets there. So again, I may do a stop and reverse here. Okay, so higher highs, lower highs on the RSI, just about when I would be able to enter the very first candle. So again, I'd set my orders and looking for a 2 to 1, and I do actually get that, right? So go back to what I was saying earlier, what you should not do with your testing. You shouldn't use this as a way to give you false expectations. Okay, so what your testing isn't to try and find all the winning trades you can and build up some crazy equity curve to then give yourself fault. That's useless, right? All you're doing at this point is you're collating data to make a judgment on your trading system. Now, I've tested plenty of systems and I've collated all the data and I've gone, scrapped it, right? That's fine. That's absolutely fine, okay? That is exactly why we're doing this. So to see whether it's worth pursuing, you know, whether it's worth on the baseline test, right? You know, is there something there? Yes, okay, it's profitable. You know, potentially then start trading it once you're happy and then refine it. Obviously, once you've gone through and you've got your results, you then want to go through a phase of demo trading. And basically what that does, obviously it's not going to simulate the emotions of live trading, but what that's going to do is that's going to make sure that you can then execute the trades properly. Okay, so all the little nuances that you don't get through backtesting, because obviously what I'm doing here is I'm not actually placing live orders. Right, I'm not actually placing orders. I'm just saying, oh, I'll place an order there, I'll do this, I'll do that, but I'm not actually doing it, okay? I'm not actually position sizing my trades, okay? I'm not actually waking up at 6 o'clock in the morning to execute this trade, right? What happens if in live trading, it's easy enough for me to do this in backtesting, but what happens in live trading if I oversleep, right? I would have missed this trade. Okay, so it just, all the little things that you don't get out of backtesting, that is what your period of demo trading is going to give you, okay? Your ability to execute your plan, how you've tested it, right? To position size your trades accordingly, making sure that you haven't just tested the 1 minute time frame and it's way too fast for you, right? Or you haven't tested like the daily time frame and then actually you're waiting months in between trades and you think, do you know what, this isn't for me. Okay, I could trade, a smaller time frame like the 4 hour hourly. Okay, so it's to sort of iron out all the nuances, right? And then obviously go live with a small account. Again, making sure that you're happy and that you can generate consistent profits over time and that it reflects your backtesting results, and then start increasing capital to your trading account, right? Basically, what I do is I'll go back, okay, and ideally you want to do this year by year. So you want to have your full range of test results, and then you want to have it broken down into years and maybe even months, okay, so you can see and analyze each individual month and each individual year, as well as your whole period, right? So that you know what to expect from on a monthly basis, on a yearly basis, and on a a 4-year, 5-year, 10-year period, right? So basically what I'll do is I'll go all the way back to the beginning of my back testing, and basically what I'll do is I'll just count all the wins and losses that I've got, okay, and I'll just collate them into my spreadsheet here. This is my equity curve for 1 year, right? It starts here and it ends here, right? So in fact we can just adjust this table to suit, right? So alright, so after I've got a year's worth of testing, okay, I can now get a relatively good gauge on how the system is likely to perform based on 1 year's worth of data, and then I can make a judgment as to whether I want to pursue it and to look into things further. Generally over a year, if it's sort of, if it performs really bad over a year or it's negative, I might have second thoughts on whether I want to pursue it. Obviously then I'll then do another year. Ideally you want to get sort of 4 years just to give a true representation, because like I say, sometimes you can get a year's worth of data, and again this is going to depend on the time frame, right? Based on the hourly time frame, you can get like a year's worth of data, and it be sort of break even over a year, but then the next year might be wildly profitable, the year after that might be wildly profitable, okay? So you need to make a judgment on the hourly time frame, in my opinion, based off of a more than a year. At the end of the day, you've just got to be comfortable with it, right? Everyone's sort of parameters are going to be, they're going to change, right? Like from what they're comfortable with. So what I'll then do is I'll then go through each individual trade, okay? So I'll go back, I'll start entering the times and the dates of the trades, right? Because obviously I've got all that data saved on my trading view. Okay, so if we just go here, obviously I've got all this data saved, so I'll go all the way back and I'll go through individually. So if we just start, obviously I'll start at the beginning, but let's just start here for an example. Obviously I know that this is my entry and it was the 2nd of March 17, okay, so I then go over here, 2nd of March 2017, right, time, I'll then 1800, okay. Right, and then my entry reason, it was a pin bar. So your entry reason is good because if you notice that, let's say pin bars, most of them don't perform very well, you can consider eliminating all your pin bars, right, and then seeing what difference that makes to your equity curve. Okay, so let's say that let's say that 60% of my losing trades are pin bars, I can eliminate all of them and I can see, right, just for an example, okay? So this is the bare minimum. What I suggest obviously you do now when it comes to optimizing is if you go up to here where it shows you the column, right, and you right click and then you insert, you can insert different columns, okay? Another thing that I suggest that you track is then screenshots, okay? So you screenshot your trade. Alright, so let's just take this trade for an example for the screenshot, okay? So if you just click here on the top right hand corner, it says take a snapshot, right, and then it will give you an image URL. If you just copy that, okay, go back over to your spreadsheet and then you paste that into your spreadsheet, right, what you'll then get is you will get a link, which if you click it, it's going to take you to your trade, okay? And it's then going to take you to your trade, and it's going to bring your trade up like this so that you can see all your individual trades, which it's a great thing to have, okay? Because you might think, well, what happens, how many times did my trades exceed a 2 to 1? And as you can see here, we can see that, right, okay, this tick, this would have exceeded a 2 to 1. So now you can optimize your trading, your trading system. How many times did it hit structure, right? Tick, this would have hit, most recent structure, right? And all the rest of it. Even things to do with entries, okay? How long did, whatever you want, right? It's good to have the screenshots there so that you can then analyze afterwards. Another thing that I'd suggest adding, okay? Again, we started off really basic, and you can add and grow as you go through your testing, right? So that you don't, is a comment section, okay? So you can write a brief description about the trade, okay, if you like. So so with this trade, we can say that we had major structure, right? So you can go through and you can say this trade played out at major structure, and then you can see whether that makes a difference in your testing, because it might not make a difference, okay? So again, we can go back to our spreadsheet, and in comments we can say taken at major structure, right? Or something along them lines, okay? And then we can build out comments in the trades, so then we can, we can go through and see whether it makes a difference. Let's say that, 80% of our winning trades were taken at major structure, okay? And only, 80% of our losing trades weren't taken at major structure. Okay, so then we can only take, and then all the trades that we didn't take at major structure, we'll go through, we'll take out, and then we'll see whether that makes a difference to our overall equity curve. Okay, and you can see that we can start to optimize that way, right? And then you can look at different target levels, right? So obviously we know that our baseline test was just a 2 to 1. So we can say, we can put a brackets here and we can say baseline outcome. So what we can then do is we can then insert another column, and then we can see, right, what happens when we take targets at major structure, okay? If we take targets at structure, right, and we can see what would have happened if we was to take our targets at structure. So obviously we can see that this particular trade would have been a 4R trade instead of a 2R trade. Okay, so we can write targets at structure 4R, right? Okay, and so on. Obviously this isn't the actual trade, I was just picked a random one, but you can see how we can then go and add different things as we go, add different filters, take different things out. But obviously max drawdown, okay, so we can see that our maximum drawdown, so obviously we can see that our high there was 11,900 and our low was 10,825, right? So we can then calculate our max drawdown. Let's just see whether this has had a higher drawdown. So this was 15,791 and a low of 14,612. So then we can then calculate which had a bigger drawdown. Obviously your max drawdown is going to depend on how much you're risking, right? Because obviously look, if we go over here and we risk if we risk 2% per trade, right, and this is going to be a 4% profit, you can obviously see that your total balance then increases, the end amount increases because the profit's higher. Okay, but your maximum drawdown is then going to increase. So you can obviously, so now obviously this percentage difference is going to increase the more that you risk, right? And alternatively, let's say that we wanted to have a really low risk system, okay, so 0.5%, let's say we want to do a 0.5% risk, right, and a 1% gain, okay. Obviously you can see that we earn a lot less, right? Because it's a very, very low, because we got quite a low risk, right? But obviously you can see that the drawdowns are very, very small. Okay, so obviously that just depends on your appetite for risk. Okay, so another good little trick, right? So if we want to find our max drawdown, okay, and we've obviously got we obviously know our high and low points, right? If you're not the best on a calculator, right, and you struggle to work that out, or a quicker way to work it out, or let's say you haven't got a spreadsheet that you haven't plugged loads of formulas into, right? Because obviously I'm just creating this for the majority of people that won't have. What you can go to a good website called percentagecalculator.net, and it's got a percentage calculator on there for you. So what is the percentage increase or decrease, right? So obviously our first metric was 11,900 to 10,825 calculate, so that's a minus 9%, and our second one was 15,791 to 14,612, and that's a 7%. Okay, so our highest is a 9% from 11,900 to 10,825. So our biggest, so it says 9%, right? Okay, so our max drawdown is 9.03%. Okay, so obviously you can calculate that any way you want to. That's just a little trick, right? Or a little, a helpful website that you can see. Win rate, obviously you can use it then as well to calculate your win rate. So I'll show you that in a minute. Let me just go through. I'll count up the total wins, the total losses, right? So obviously total trades, total wins, total losses, right? And the win rate. A good way to work this out so you don't have to go through and just count it all is just to highlight all of the cells, okay? Then right click, go to get data from table range. Let me just move this over so you can see some faces blocking it. Right click, go to get data from table. Okay, and that brings us to this page here, right? So then what we can do, we can go down, we can see that we didn't actually get 2 results, okay? And I know why. So as you can see, we've got 134 rows, so that's 134 trades over our year period. It's actually 132 because I didn't input the data for 2 of them. Total wins, so we can select just the wins, right? And then we know that we've got 55 wins, okay? 5, and then we can go to total losses the same way. Select just the losses, okay? And then we can scroll down and we can see that we got 77 losses, okay? So 77 losses, 55 wins, right? Just so that we don't have to go through and we don't have to count everything up, right? Obviously you can do that manually as well. You can most likely set a separate shortcut or something up to to calculate that as you go. And then we can go back over to our calculator. 55 is what percent of 132 trades total. 41.6% win rate. Okay, so then we know that this strategy is a 41.6% win rate. Alright, so once we've got all that information, another great thing, and this is going to really help with our trading psychology, right, and our expectations in the live markets, is to get a bigger graph with your equity curve and get some main takeaways, right? And also what you're going to want to do, obviously now you've got this main equity curve, when you're doing your live trading, track your live trading the same way so that you can compare the 2 equity curves, okay? So this is our backtesting equity curve, right? So we can label this backtesting equity curve. We can also have one beside it for our live trading, okay? So we can compare the 2 and just make sure that we're on track, right? To make sure that, we're getting similar results to our backtesting, okay? Okay, so some main takeaways to take away from this, and this is, okay, so on average I get a drawdown of between, and let's say that we highlight all of our drawdowns, okay? So we'll go through with our box tool, right, and we'll say, right, this is a drawdown, that's a drawdown. Okay, this is a bit of a drawdown here, so we went into a bit of a drawdown period here. This is a bit of a drawdown here. And then obviously we started winning a little bit, went into another bit of a drawdown, right? Okay, we started winning again, went into another little bit of a drawdown. Okay, so we can build out these sort of drawdown periods, right? And obviously just bear in mind that this was over the space of a year, right? So on average, I get a drawdown of between, let's say we've calculated this and it's between, 3% to 9% on average, right? Every, 3 months, right? Every 3 months. So then in live trading, if we get we know that we can expect this, okay? But then if we went into a live trading and we was getting drawdowns of between 9 and 12% every 2 months, right? We'd know that something is up, okay? Our worst percentage loss on a drawdown, that was back here, wasn't it? And that was 9%, right? So now obviously we know that where we've got this data, right? We know that if we get a drawdown, of 10, 11, 12%, we need to really be careful and that it's actually our worst drawdown, and we need to analyze something, right? Something might be going wrong with our system. We might not be taking trades accurately as traders as we've tested it. Okay, so again, it just gives you some metrics to look out for. Okay, right, these average duration of these drawdowns. So again, these might, like the average duration, if we add these all up, might be, might be 3 weeks, say, okay, or 2 weeks, right? Longest duration is here, and that probably lasted about 2 months, right? So then if we're in a drawdown for 2 months, we're not surprised, right? Because we've had that in our backtesting. Okay, longest period without a new equity high, so between here and here, and that might have lasted 2.5 months, right? So if 2.5 months go past and we haven't had a new equity high, we're not surprised and we're not emotional, because we had that in our testing and that's normal. Okay, average duration, average drawdown period without a new equity high. So that's our period without a new equity high, and actually this is a really long period here without a new equity high. Okay, and this might be let's say 3 months on average. Okay, so if we go through an average drawdown, we don't get a new equity high in 3 months, we're not surprised, because because that's our average, right? So as you can see, like having these metrics, right, and having this these main takeaways here is really going to help you with your live trading psychology. Okay, so you're not just guessing, right? You're not going into your live trading and you're not thinking to yourself, oh my god, I've been trading for 2 months and I haven't made any money. Okay, because you'll be comfortable, because you'll be like, okay, it's a bit annoying, but obviously in my testing I had that period anyway. Okay, even if it's been 3 months, we haven't made any money, that the chances are over a year's period we're actually going to make 50% on our account. Right, so that is why live trading is so important. There's many traders that, they'll be trading for 3 months, not have new equity highs in their account, think something is wrong, and they'll just stop trading, but they haven't actually got the live data. And obviously this is just based on a year. Ideally that is, we've got 100 trade sample size over a year. To me, that's not enough. The 100 trades is enough, but the time diversification isn't enough. Right, we want to get at least, in my opinion, 4 years on the hourly time frame. So this is realistically more likely going to be closer to 500 trades, which is a really nice sample size. We're going to get a better grasp on our win percentage. Okay, we're going to get a better grasp on our max drawdown. Okay, so this may increase, right? But then, that's just going to be all round better for our trading psychology. Our max consecutive loss may increase. Obviously, there's this topic is so extensive, I can go on forever onto how to build out spreadsheets, more in-depth spreadsheets, how to increase your trading system, different things to look out for. But we'll save that for another video. So I really do hope that you can see the power in this, right? The importance of it, okay, and how it's going to impact your trading career, right? Ultimately, your ability to do this, right, and to test systems effectively and to really sort of solidify your own belief transference and your own projections on a trading system is going to ultimately make or break you as a trader. So again, I hope you got value from the video. If you did, drop us a like, share it around, leave a comment, right, and wherever you are on your trading journey, I hope you have a good week, and I'll see you on the next one.